Good morning, everybody. It's Chris here from Serene Education with the Four Majors Analysis Update for the 19th of December 2013. Okay, so yesterday, last night, 7 p.m. GMT, the Fed came out with the news that they were going to taper their spending plan, their purchasing plan, by a full $10 billion per month. And the markets went a bit haywire. Subsequently, what we saw on the four majors were pullbacks against the US dollar and the US dollar rallying on that outcome. So what it's done is if you look at the charts, you could see that euro against US dollar here on the daily has clearly pulled back. We've had a nice full bearish engulfing candle, and you could see that the indicator box here is primarily looking a bit all flustered. Primarily long-term sentiment is still favoring the upside. However, the intraday, we're starting to see a bit of indecision. RMO and our institution moving average not clearly working with each other because of the volatility we saw yesterday, which has now sent this into a bit of a head spin. But what we do need to see, and what we are seeing at the moment now, is a potential high for the euro, and we could see prices now continue to fall. Ideally, we could be looking back at 23.6 on the weekly fib here as a potential target. This bearish engulfing candle at our major support and resistance level high, i.e. the monthly and weekly fib level highs, as well as our October highs, is clearly a resistance level, and the news on FOMC yesterday is likely to cause a resistance level high now. And with this bearish engulfing candle, what we were looking for is potentially prices to drop even further. This candle of here engulfing a full weeks of price action or indecisive price action. We could look for potential for price now to drop to the downside. However, we want to see everything in our template pretty much stacking up for intraday sentiment. You can see intraday nothing really moving together here. We want to see if this is to be genuine selling. We want to see most of the indicators here are pretty much telling us we should be looking for shorting, and the R squared to complement it. Here at the moment we have a lot of blue within all that. We do have a red arrow, however, on our daily time frame, so clearly telling us we are seeing, or potential seeing, a change in market sentiment. And as long as we fail to break the monthly weekly high here and the October high, we're more likely to see price consolidating with an outlook for long-term sentiment to start driving lower towards these price support and resistance level or fib level highs and lows. Sterling, let's just bring this one to the page. Here again, also the last couple of weeks we've seen price playing with the monthly fib level. After the breakout of the September and October resistance level highs, we saw a rally towards the monthly fib. However, when we got to the monthly fib, we saw price consolidating. And we did see on one occasion price actually breaking that monthly fib at the 38.2 level. However, on the pullback, not forging out on our support level, and subsequently not building on that. And what it meant was we saw price falling back below that monthly fib level and causing a bearish engulfing candle, which subsequently saw price pulling back even further and further as such to our prior resistance level breakout level here at the 1623 and change. But when we got here yesterday, we saw a lot of positiveness for sterling to start with some fantastic figures out early in the morning. Well, the figures being that MPC was not going to change their stance on the purchasing plan they've had in place, and so that we saw a nice rally for sterling. However, FOMC came out and we saw price action being thrown around a bit, and subsequently what happened is we've seen price pulling back to the underside of the 38.2 level. So what has it done now? You can see while we've been in this move, it's still very much positive. However, we do have a red arrow, and that came out a couple of days ago. But you can see the indicator box over here primarily looking a lot better or far better off than its euro counterpart. So, however, still below the monthly fib. Okay, and as I mentioned, if we don't see price moving above that anytime shortly, we're going to start seeing a major resistance level high being forged at a major point. And if that continues to occur, then we're likely to see price starting to look bearish indeed. However, as it stands at the moment now, sentiment is still wanting to drive higher. However, if we don't see a daily close above this 38.2 monthly fib level, then we should start looking for consolidation to continue for the foreseeable future. And the outcome, if it continues without a breakout, would start then to fare to the downside. So here, everything's looking positive. The only thing in the oscillator is still looking lower. If we drop down to our 4-hour time frame, we do get a buy signal. I just want to move this over so you can see it. There we go. A lot of movement yesterday on the beginning of the day. However, when the FOMC statement came out, you can see a lot of whipsawing on that, and we actually had a trading range on that 4-hour candle of 140 odd pips. So a lot of whipsawing, a lot of sentiment driving that. However, closing lower, and massive spinning top now on the 4-hour time frame, and the 4-hour that preceded that bearish engulfing and subsequently been lower. So now still under the 38.2 level. We do have a buying opportunity presenting itself, but it's not going to be a genuine buy because we're still below that monthly fib. So got to be patient here, wait for it to occur. If we fail to see it and price starts to drop, then we should look for everything to complement that, and then we could target back to our price support level lows that we just come from, which would be in fact our institution moving average lows. US dollar Swiss franc price has been very consolidative at the 38.2 weekly fib level. You can quite clearly see if it just moves this over. There we go. The last week or so we've seen price bouncing and retesting that level. However, after the news announcement last night, we saw a nice bullish engulfing candle, which has now engulfed this entire consolidative range at the 38.2. So is this a building platform now? Ideally, if you saw, we do have a blue arrow in play now on the daily. However, you can see the daily is very much indecisive, and you can see the long-term sentiment is still favoring negativity. Intraday, we're seeing a bit more positiveness, but still one or two areas where it's red. So a lot of indecisiveness. However, a bullish engulfing candle yesterday. The only sentiment candle that's going to actually cancel that bullish stance will be a bearish engulfing candle, which would then be a tweezer top, and subsequently that would drive prices lower. We do need to see a break and close lower than 38.2 to give us that indication. So here in today we should be looking for buying opportunities preferably. You can see we saw a drop recently. We could take those highs to the current low. If you want to target it, you can see that the 23.6 level price is trading above that intraday. If we do see a nice bullish engulfing candle on our shorter term time frames, we could target the 38.2 intraday, and between these 2 points you can see there's a healthy 63 pips. Above the 38 to the 50, there's another 50 odd pips on that. So here intraday, if I just drop down to my 4-hour time frame, you can see that my RMO and my institution moving average are not clearly working with each other. You can see the RMO is still very much below. A very quick move in a very lagging indicator. You can see the RMO is still favoring the downside. If this is to be a genuine positive move intraday, we would need to see our institution moving average be below price. You can see quite clearly on the 4-hour, there's still a lot of movement to be seen before we even see price getting above it. In fact, it'll probably be the breakout highs we saw through November. But everything else, blue arrow, the candlesticks are blue, and that's the only thing that's in our favor, is the fact that the RMO is still below the 0 level, and our institution moving average is still well above price. And between where price is trading right now to my institution is 106 pips or so. So if you're going to be trading quite aggressively counter trend, then the opportunity will arise here. You can see these profit points between these areas. Do so at your own, just as long as you follow your money management and know the risk involved trading these tight ranges. US dollar Japanese yen. Here we go. We've been saying all week that price still favors the upside, and sure enough, the US dollar yesterday rallied on the news of the FOMC statement outcome and broke the weekly high. We've seen a lot of consolidation here. Price had actually dropped off quite aggressively. We did have a red arrow, however, not breaking price swing lows at 102.32, and I did say we did need to see that occurring to see any further pullbacks with the candlestick changing color. You can see that the long-term sentiment still wants to drive higher. We are seeing a bit of indecision intraday. That's primarily as we've seen our pullback now in the breakout. So now what's happening is prior the April fib level, weekly fib level highs here at 103.62, clearly resisting price. However, with the breakout yesterday, a nice bullish engulfing stance, broke that. Now we're seeing a pullback. Now as long as price can maintain above this level here at 103.62, we're looking for a nice bullish engulfing candle, a hammer, building, some sort of building indication from the candlesticks intraday. Straight away we get a buying opportunity on the 4-hour. You can see the bearish Harami pattern that's formed now. However, price is clearly above a price support and resistance level. So now we want to see price now consolidating. The last 4 hours have been very indecisive indeed. The spinning top or doji. Now that's an indecision candle. So now got to wait for the next 4-hour candle. Ideally, if this is to be genuine sentiment move higher, we do need to see a bullish sentiment candle on our 4-hour. Nice bullish engulfing candle. Ideally breaking above the prior highs. If not, a nice hammer of some sort to give us an indication that price is now building on that momentum, that breakout momentum, and now we should be targeting the higher highs. Ideally, now the next level would be to our monthly fib levels, which is the 61.8 level, which is a healthy 157 pips away. So as it stands at the moment now, we're looking for US dollar bullishness across the board against any cross pairs. So if you're looking to trade, do your due diligence. and see if we can actually build on that momentum we saw from yesterday's outcome. Today we have EU Economic Summit meetings for the Eurozone, so all day today EU Summit meetings are in play. 9:30 GMT this morning we have retail sales month-to-month figures. They're expecting a positive figure from a negative 0.7% previous to a forecast of 0.3, so expansion there. Anything higher than that or anything higher than the 0.7 would be great for retail sales month-to-month figures as we head into the Christmas season. Eurozone, we also have Spanish 10-year bond auction, which is a tentative figure, should come out sometime before noon this afternoon. Then this afternoon we have the unemployment claims for the US market as well as existing home sales. On both fronts, the unemployment they're expecting less, which is good, and existing home sales figures they're expecting slight contraction from the prior figure, which was 5.12 million to 504. So just a point, what are we looking at? 0.8 difference. And then we have the Philly manufacturing index later this evening or this afternoon at 3 p.m. GMT, which is expecting an expansion there, figure 2 as well, almost 4 points. So on the FOMC statement news announcement yesterday, we saw breakouts, guys. We saw some sort of indicators. Some pairs do need to see further confirmation. However, it does allow us to see that the Fed is seeing some action out there for them to actually start tapering. There's news that they're going to reevaluate the current setup again in January and February of next year to see if there should be even further tapering. So as it stands at the moment now, we are seeing some positiveness for the US dollar across the board. So if you are looking to trade, please do your due diligence and see how things stack up before getting involved. Okay, I'm going to leave you with that. Hope you have a fantastic trade day today, and I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.